Now friends, come to this particular question. That way this particular question is pretty simple. See, there is one foreign fund, and this foreign fund has transferred its assets to the ABC fund, okay, which is covered by SEBI, and it is a unit in IFSC. So basically it is a foreign fund, and the foreign fund has got relocated to India, and that is in an IFSC in India, okay. So there is a fund relocation, okay. So fund relocation is given a special benefit under section 47, that it will not be regarded as transfer. So upon this, it will not have any taxable event in this particular situation. Same thing will be applicable even with respect to the unit holder of this particular fund. So if they have made profits out of this particular relocation, that also will not be subject matter of any regarded as transfer, okay. So no question of any taxation coming. Out of the transfer of fund, it has made a profits of so much, so no question of taxation. Unit holders, all the unit holders are non-resident. Basically this is one of the condition under section 47, that it will not be regarded as transfer. They made a similar profit, so it will not be regarded as anything taxable in India. One of the unit holder made a profits of this much by transferring his units into an IFSC. So basically is a unit holder, the fund is now in IFSC, and thereafter he has appreciated the value, and for that he has made the profits in the foreign currency. So this unit holder, because now you are doing trading into IFSC here through the mutual fund, but mutual fund is trading into IFSC in India. So your unit holder also will not have any taxable event in this particular situation, covered by section 47, variety of the provisions not regarded as transfer. Now ABC fund has made profits. Now this fund is in basically a unit in an IFSC, basically because it has relocated here, and it has distributed income of this 6,000 to its unit holders. So basically it is a dividend on mutual fund, okay. Now this dividend on mutual fund can always be a subject matter of little bit debate, okay, with respect to the taxability in India, because dividend on the unit of IFSC is given a special rate. That I already explained it to you before. So 115A provision has a special rate, okay. So you straight away apply the special rate and accordingly tax it, because this is out of the unit in IFSC. That way you can say, okay. Or you can take a little bit of an alternative view, that it is a non-resident, okay, and non-resident is out of a fund. No doubt that the fund is in India, but for all logical purposes it is to be treated as outside India, okay. Physically it is inside India. So a non-resident getting dividend out of the non-Indian enterprise, okay, so will not be subject matter of any taxation like a foreign dividend, but this is going to be a little bit debatable. So I will better go with the view that 115A provision, special rate of tax should be applicable.